Welcome back to Market on Close. Just a few minutes left in the trading day for this Tuesday. It's time for the big picture. Let's welcome in the team from Charles Schwab. Very pleased to say I am joined by Nathan Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research, and Mike Townsend, who's the Managing Director, Legislative and Regulatory Affairs at Charles Schwab. Thank you so much, gentlemen, for joining me. Mike, let's start with you. What's the latest now on President Trump's big, beautiful bill? Because it seems like the investor focus has been squarely on the developments out of the Middle East. We've had a lot of Fed speak as well, but no doubt this is still in the back of minds of a lot of market participants here and how this will all shape up.
Yeah, Sam, it's great to be with you. I think this is a critical 48 hours that we're entering for the Senate consideration of the one big beautiful bill. There are a lot of pieces that are still being hashed out. There are disagreements around Medicaid cuts, around green energy tax provisions, around the state and local tax deduction. So a lot of sort of behind the scenes negotiations going on. But timing wise, I think we'll know probably by this time on Thursday whether this is going to make it through the Senate by the end of the weekend. They may stay in session right through the weekend to take all the necessary votes. The goal here is the president wants to sign this on July 4th, and there are a lot of hurdles to overcome between now and then. It's got to pass the Senate, then it has to go to the House. And given the changes to the House bill that the Senate is likely to make, it's not a slam dunk that either of those are going to happen by July 4th. But I think we'll know soon whether that timeline is realistic.
Right, Nathan, as you've just heard there from Mike, I mean, this is just one piece of the bigger picture right now as far as what markets are really focused on and, how investors are digesting just so much going on as far as the global cross currents as well. What do you think markets are the most focused on at the moment with everything going on with the geopolitics and also a lot of the Fed speak, which we've had to digest as well?
Yeah, so it's a good question, Sam. What could, so right now basically we're near all-time highs. The price action looks great. Looks like the Nasdaq 100 is on track to have a fresh all-time closing high. The AI sentiment narrative is done 180 degrees since back in March and April. And we've gotten the news flow to confirm that it looks like the Middle East situation is taking a backseat. Good news on the ceasefire there. Let's hope that holds. And then with regards to the bill, the big, beautiful bill that's coming out, of course, there's some potential to get some, disruption or volatility or delay there. But if you look at the bond market, it's been well behaved. We got the 30-year back down to 4.83%. When we were threatening cycle highs, basically a month ago, that was certainly had the potential to create some more selling pressure in the equity markets. But now that it's backed off like that, I don't think the market should be too concerned with that. So the next logical kind of hurdle that could potentially disrupt this melt up in stocks that we've seen is going to be that July 9th deadline that comes up regarding the tariff pause. And it's going to be EU and Japan to make sure that, when you look at the news flow there and how the negotiations have been going, they say it's been ongoing. They say it's been positive. But as we get to that window, if there's going to be something that kind of derails the bulls here, it's probably going to be some news on the trade front, in my mind.
Okay, so keeping tabs on any trade developments. Mike, let's get back to you as far as what Nathan was just talking about. We've seen those levels as far as the 10-year Treasury yield falling at 4.289 now, coming off the back of Powell's commentary. I'm just wondering what you made of that this morning.
Well, I think all eyes were on Powell this morning as he testified before the House committee. He's going to do it again tomorrow before the Senate committee. And, one of my big takeaways was that this idea that the president had sort of floated that he wanted to see Republicans rake Jerome Powell over the coals at that hearing, it didn't really unfold. I thought it was a pretty mild tone generally. There was some criticism really from both sides of the aisle that rates haven't come down. But he stuck to his talking points that he has stuck to all along. And I think the bond market didn't see much to get too exercised about based on that testimony. He keeps saying, we're in a good position to wait and see. Things are not, don't feel the need to move fast. To me, the interesting thing to watch here is there's starting to be some public internal dissension at the Fed. We've seen just in the last couple of days, both Christopher Waller and Michelle Bowman, two other Fed governors, start to raise the idea of a possible rate cut in July. So it'll be interesting to see how that unfolds over the next 6 or 8 weeks here until the next meeting to see, whether that internal division manifests itself into more concrete action. I absolutely agree with Nate that July 9th deadline, that's the 90-day pause ending on the reciprocal tariffs, and the White House is going to have to make a decision about what to do. I think that's a key date to watch here in the next couple of weeks.
Okay, certainly a catalyst as far as what they're going to say about trade. It was interesting, wasn't it? Because Waller was almost like a bit of an outlier last week. And then you had, as you mentioned, Bowman sort of jumping on the bandwagon and also Goolsby's commentary too, certainly leaning a little bit more dovish there as far as that commentary. But, I mean, Fed Chair Jay Powell, nothing, massively new coming out of what he had said this morning, and still reiterating that inflation still remains elevated relative to that 2% target. So I'm just wondering, Nate, before we let you go and we close out this trading session, about just under 3 minutes to go now, what your thoughts were on Powell's comments.
Well, I think he's taking a smart approach, and I think he has the data to basically back him up. And what I mean by that is that inflation has been cooperating, and we haven't really seen the impact of tariffs. But, that could all change if those levels begin to rise after we get to that deadline here. So that's what Powell is recognizing. And, markets aren't expecting him to be super aggressive. It's just 2 cuts. Even if they were to do one in July, they could then do one and wait and see. But the probabilities don't suggest that right now. And so, look, there's been some softness in the labor market. That's the other half of their dual mandate. So inflation looks okay, at least right now. And then the labor market, we've seen initial claims kind of move up towards that high water mark of 250K from last October. We haven't eclipsed that yet. The unemployment rate still at 4.2%. Yes, participation has something to do with that, and it is kind of keeping it subdued. But I think at least based on the hard data that's been reported, he can then afford to be patient. What he doesn't want to do is do a cut in July and then have to raise subsequently because the tariffs finally do take hold.
Got it. Really appreciate it, guys. Thank you so much for joining me. That was Nate Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research, and Mike Townsend, who is Managing Director, Legislative Regulatory Affairs at Charles Schwab.